The Toronto real estate market is always changing, and 2025 is no different. Many people wonder if home prices will drop or they will keep going up. Several factors will influence the market this year, and if you're thinking about buying, selling, or investing, here is what you need to know. The first factor is interest rates and affordability. Interest rates affect how much people can afford to spend on a home. If rates go down, more buyers will enter the market, increasing demand. If rates stay high, fewer people will buy, which could stabilize or lower home prices. The Bank of Canada key overnight interest rate was reduced to 3% on January 29. It's the 7th consecutive rate cut since June 2024, when the overnight rate hit 5%. This 5% rate was highest in 23 years due to the global inflation brought on the pandemic of 22-23 and the increased geopolitical tension we've seen since the outbreak of war in Ukraine in February 22. Whether this rate cut will continue over the next quarter is not at all clear now. However, due to the new 25% tariff charges the US has announced for Canadian products beginning February 1st, 2025. Another factor is housing supply and demand. There are not enough homes in Toronto to meet demand, which has kept prices high. Even though more homes are being built, they might not be enough to satisfy the number of people looking to buy. According to Toronto Regional Real Estate Board December 2024 market statistic, new listings increased by 16.4% year over year, totally of over 166,000 for the entire year of 24. This reflects a significant rise compared to over 142,000 new listings recorded in 23. Home sales rose 2.6% year over year. Active listings also saw growth, not a decline. The next factor is government policies and housing assistance. The government is working on ways to make housing more affordable. There are programs to help first-time home buyers and tax incentives for developers to build more homes. According to Toronto Regional Real Estate Board, the average selling price for all home types combined in 2024 was a little bit over $1,117,000, representing a decline of less than 1% compared to 2023 average price of a little bit over $1,126,000. Additionally, data from the Ontario Real Estate Association indicates that the average price of resale residential homes across the province in December 2024 was around $834,000, a minor decrease of 1.7% from December 2023. Programs such as the First-Time Homebuyer Incentive and the increased CMHC insured mortgage limit to $1.5 million could help more buyers enter the market. Next factor is immigration and population growth. Toronto attracts thousands of new residents each year, and many of them need homes. In 2024, Canada welcomed 485,000 new immigrants. About 27.7% of these immigrants settle in Toronto and the Greater Toronto area, totaling approximately of 134,000 individuals. This demand keeps the market strong. As long as people continue moving to Toronto, housing demand will remain high, making a big drop in prices unlikely. Another factor to consider is mortgage renewals and homeowner challenges. Many homeowners will be renewing their mortgages at higher rates this year. Some might struggle to afford their new payments and may be forced to sell their homes. About 24% of Canadian mortgages will come up for renewal in 2025, with some homeowners facing an increase from 2 to 5.5% in their mortgage rates. If many people are forced to sell at once, prices could indeed fall. However, banks are offering longer repayment options to help homeowners manage these higher payments. Next factor is rental market trends. Contrary to early expectations, rental prices in Toronto have seen a slight decline in 2025. According to a recent report, the average monthly rent for a one-bedroom apartment has dropped by $120 year over year, bringing it to approximately $2,150. Meanwhile, the average rent for a two-bedroom apartment has also declined, now averaging $2,925, down by approximately $150 for 2024. This decrease is likely due to increased rental supply and shifting market conditions. While rental prices remain high compared to historical levels, the slight decline may offer some relief to rentals who were previously priced out of the market. Next factor is pre-construction and new development. developments. New home construction slow in 2024 because of high cost and fewer buyers. If interest rate drop and demand increases, new developments could pick up again. As of 2024, the number of housing starts in Toronto was around 37,700 units, down 20% from the previous year. If developers don't build more homes, the supply storage could continue to push prices up. Economic conditions and trade policies are another factor to consider. The real estate market is influenced by the overall economy. If inflation slows and job opportunities grow, more people will feel confident about buying homes. As of December 2024, the inflation rate had decreased to 1.8%, continuing a downward trend from previous months. The Bank of Canada's January 2025 monetary policy report projects that in the absence of new tariffs, inflation will remain close to 2% throughout 2025. However, new trade tariffs or global economy slowdowns could impact foreign investments in Toronto real estate sector. Another factor is consumer confidence in the market. People's feeling about the housing market play a big role in whether they buy or sell. If buyers think prices will keep going up, they might rush to purchase. If they believe prices will drop, they might wait. A recent survey found that 62% of Canadians believe home prices will increase in 2025, while 38% expect a market correction. Confidence level will shape the real estate trends throughout the year. Luxury property have always had a separate market from the general housing sector. In 2025, the high-end market is seeing mixed trends, with some ultra-luxury homes sitting on the market longer due to affordability constraints. However, international investors continue to play a key role in this segment, keeping certain high-value neighborhoods in demand. Co-ownership and multi-generational housing are becoming more popular as affordability remains a challenge. Townhouses and condos are also becoming go-to options for first-time home buyers looking for more affordable ways to enter the market. Should buyers wait or buy now? Buyers should closely monitor interest rate changes. If rates drop, it may be a good time to buy. When should sellers list? The spring and summer months tend to see the highest buyer activities, making it the best time to sell. Where are the best investment opportunities? Emerging neighborhoods with ongoing infrastructure projects such as East Harbor and Scarborough Golden Mile may offer solid long-term growth potential. And final thoughts, what to expect in 2025? Toronto's housing market is unlikely to crash because demand remains high and there is still shortage of homes. However, we may see price adjustment in some areas. My recommendation for buyers, stay informed about interest rate trends and market conditions. While rate cuts may improve affordability, it's essential to assess personal financial situation and remain cautious as affordability challenges persist. And my recommendation for sellers, pricing homes competitively remains crucial to attract serious buyers, especially in the market where affordability is a significant concern. Monitoring local market trends can provide valuable insights for setting appropriate price points. What do you think will happen in 2025? Share your thoughts in the comments below. If you found this video helpful, please like and share it, and subscribe for more helpful content on navigating your real estate journey in Toronto. If you have any questions or need more advice on this topic, feel free to reach out.